Hey everyone, thank you for tuning in for the market preview here. And if you've been following us, meaning me and the community and my partner, you can see things are really kind of just playing out kind of like we thought they would. And it's not that like we're smart or we're geniuses, it's just that we know that the best traders let the market tell them what to do. How does the market talk to you? It's from how it reacts when it gets to support, how it reacts when it gets to resistance, so forth and so on. So there's 11 different sectors of the S&P 500, and different sectors are in the driver's seat at different times. It just switches back and forth. This is just how markets are. Sometimes the most important thing to watch is industrials. Probably the good majority of the time, the most important thing is watch is tech because it's so big. But you got healthcare, you got financials. Now, I guess I'll start off with the financials, but let's start off just looking at SPY. And I think if you come back here like every day and check it out, you really start to learn. It's like an ongoing narrative. The market, things change, and people say to me like, "Gee, Mark, you seem to make all these great market calls," and it's like, you know what? I don't. I just watch the market. If something is really overbought and it's getting to a resistance level, there's a good chance it's going to reverse. It's not a guarantee, but if you watch the markets every day, you can see stuff like that. So here's our S&P, right, which is right in the middle of the recent trading range. On the downside, you got 468, and on the upside, you have around 477. Now let's go look at the financials, and I think this is probably the number one most important thing to watch. If you want to get, oops, that's technology, sorry. If you want to get an idea as to what's going to happen with the broader market, I think it's right here. Look at where the financials are, okay? Levels that had been resistance or former peaks can convert into support. You can even see that down here. This is a very common thing in markets. How is it possible that a price level that was resistance back in February of last year, so a year ago, can turn into support now? And the answer is it's because of market psychology. There are people who sold up here and then the thing collapses and they're like, oh, I made a mistake. If it gets back to my level, well, they think they did the right thing when it goes lower, but when it gets back up above, they start to say, man, I made a mistake. If I could buy this back at the same price, I'm going to. So when it gets back to their level, they place buy orders. So if you have enough remorseful sellers placing buy orders at the level that was the peak, it can become support like it did here. And you can see it even down, you can see it right down here with this price level around 33.60. It was resistance in April and June, converted to support in August, and then converted back to resistance. So you're probably saying, how does support convert to resistance? Well, there are people who sold, people who bought, BOUGHT, bought. I don't want to confuse anyone. And it goes higher, and assuming they don't sell it and it goes lower, a lot of them are like, oh, I made a mistake. If it gets back to my price level, I'm out at break even. So if you have enough people who bought here are trying to sell over here, that big group of sell orders creates resistance. Markets move higher because there's not enough sellers. There's not enough supply. And it's not just the stock market, it's any market. All right. When all of a sudden you get to a level where there's a same amount of supply and demand, it stops moving higher. So you get this big group of people that want to sell around the certain price level because 2 months prior they had bought at that price level. They've watched the thing. At first they were happy, then they were sad when it went lower. Now it's back up to their price, and it's like, man, if I can get the hell out of this thing at break even, I'm doing it. So if enough remorseful buyers place sell orders, it turns a support into resistance level, and that happened there, and it happened here. And then again with the seller's remorse, resistance becomes support. People sell and they're like, "Oh, I made a great decision. I'm the next Steve Cohen. I'm this great trader." And then it goes higher, and they're like, "Ah, damn, I made a mistake. If it can, if it falls back to the level I sold at, I'm going to buy this thing back." Right? That way, I can kind of mentally erase my mistake. If there are, all right, here's what I'm going to do. I am going to give you Well, I don't want to say it like that. I don't want to sound like some YouTube piker, you know, person who thinks that they know what the hell they're talking about. So sorry for that. But I am someone who knows a lot about the markets because I spent about about 25 years in the institutional trading world, and I actually worked for Steve Cohen, and I actually worked for Mary Gabelli, who's another phenomenal manager. So I've been around the block a few times, and this is the type of stuff we watch in the institutional world if we're trying to get a feel for where the market's going. For example, say my firm or my hedge fund or my investment fund was thinking, we want to go out and buy the financial stocks. And they would say to me as a trader, like, Mark, what do you think we should do? I would say, let's wait because there's a good chance this thing breaks. If it doesn't, then we start buying, but there's no rush to buy. If this support breaks, there's a good chance we can make a move lower. Now, we're looking at a sector. Within the sector, there are industries. So we're going to look at the four industries that make up the financials, and you will see that financial services look very weak. I mean, you don't need to be a hedge fund trader or a market guru to see that. This thing is in a free fall. Biggest part of the financial sector. The banking stocks in a free fall, descending triangle. These descending triangle patterns tend to be pretty good because they show a bunch of buyers who are willing to hang out and be patient, sellers who are getting more antsy and aggressive as time goes by. The buyers are like, yeah, whatever. If the sellers come to us, we'll buy. If not, we're it's cool, whatever. The sellers are like, oh man, I got to get out. I'm going to reduce the price I'm willing to sell it. So when you get these, what we call a high forming at a lower level than the prior high, we call that when we get a peak that forms at a lower level than the prior peak, we call that a lower high. And that just shows that as time is going by, the sellers are getting more aggressive. They're willing to accept a lower price. The buyers are just like, yeah, whatever. They're holding their ground. So the descending triangle pattern illustrates aggressive sellers complacent buyers. And whatever market you're in, whether it's stocks, bonds, commodities, shoes, peanuts, I mean, any market, if you got aggressive sellers and complacent buyers, it sets the stage for a move lower. All right, now let's just go look at the third industry here. This is breaking down too. So you see what I'm doing here? I'm looking at the sectors. The only one we looked at was the financials. We're going to look at healthcare real quick before I go. And I'm thinking, all right, what's driving the S&P? Well, right now it just happens to be the financials. In my opinion, I think the most important sector to watch is the financials. I think it's fallen to very important support. If it breaks, it's a good chance it goes lower. Now to go to the next level, I'm looking at the four industries that are within the sector. And so far, what we've looked at looks pretty weak. So now I'm going to bring up a fourth industry, and this is insurance. Now, notice how this has been trending higher. Well, this is the only thing that's been kind of keeping the XLF from really falling apart. But look at this now. It's reached resistance, and it looks like it's starting to trend lower. When things get to resistance, a lot of times they sell off because resistance is this large group of sellers, and they start to sense that other sellers are coming into the market. So they get anxious and they start to reduce the price they're willing to sell because they want to sell, but they're afraid the buyers are going to go to someone else if someone else is willing to sell at a lower price. Buyers are going to go to whoever is willing to sell at the lowest price. So the one industry within the sector that's been kind of holding it up looks like it's turning here. If that brings down the sector, I think it's going to kind of spread through the market and be pretty bearish. So we're looking at the different parts here. To get an idea of what's going on in the S&P, we're looking at the sectors. To get an idea of what's going on in the sector, we're looking at the industries within the sector. Now, before I go, I just want to point this out. This is a great teaching chart, I guess you could call it, although pretty much every chart is. Sorry, I got to have my Diet Coke there. I don't drink coffee. So if I'm ever falling asleep, I'll just hit up a couple Diet Cokes. Yeah, I know how bad they are for you. Last time I talked about this, a lot of people replied. Anyway, market memory. This is when something that a level that's important. In the market, certain price levels are more important than others. That's just how it is. Okay. If you know where these important price levels are, it's like you have a roadmap to the to the market, because something's trending up, something's trending down. You're thinking, where should I buy it? Where should I sell it? Let the market tell you what to do. Some price levels are not important. Some price levels are. That is just how it is. Most of the time, we don't know why a price level is important, but it doesn't matter. We just want to know it's there. Big part of trading is not overthinking it. A lot of people overthink it. A lot of people think it's like this really complex chess game. It doesn't have to be. Pay attention to the stuff that I talk about. What are the important price levels? What are the trends? What's the momentum? What's the psychology? This is the important stuff. We don't need to sit here and try to reinvent the wheel and come up with like the great new Fibonacci Einstein physics model that's driven by AI. Let me tell you something. A lot of these AI funds, actually, most of them, they're, I mean, maybe AI is the new thing, blah, 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 blah. I remember when the Terminator came out when I was in high school, we were hearing about it back then. But their performance has not been good. And I don't know a lot about it, but I think that AI is based on statistics, and statistics assume that people or the data, the inputs are rational, and people are not rational, especially when it comes to finance and money. But we got to resistance around this 141 level. This is market memory, December of 21, April of 22, December of 22, and over the last 2 weeks. We get to this level and we solve. Why does this happen? Well, there are people who bought at the peak and then it goes lower, and they're like, oh, if it gets back to my price, I'm going to get out. It's buyer's remorse again, just manifested in a different way. Gets back to the peak and they sell. There's enough of these sellers, puts a top on it. And a lot of times markets sell off after they get to resistance, because this, again, the sellers start to undercut each other. So it's a snowball effect. So we have right now the second and third biggest sector in the market, healthcare and financials, are each looking like they could pretty much set up to make a pretty meaningful move lower. And that's going to take the broader market down. So if you're a SPY trader, just be aware. You could look at some of the inverse ETFs. SH, for example, trades in the opposite direction of SPY. All right, everybody. So listen, make sure you check back, because I think there's going to be some interesting stuff going on over the next few weeks. Sometimes the markets are quiet and it's hard to make money. Sometimes the markets are really moving and they're really telegraphing what they're going to do. And it's relatively easy to make money. And I think we're kind of in one of those times right now. Okay, everybody. Thank you so much. And I hope to see you soon.